Thank you very much. For those I've not met, my name's Joe Kaderovic. I'm the CEO of Cobalt Blue. It's always a pleasure to come to the conference and have an opportunity to introduce our company as well as discuss cobalt market trends. In the time that I have, let me introduce you to both our flagship project but overall our company strategy as well. So Cobalt Blue is the owner of the Broken Hill Cobalt Project. It's our flagship. It is a large, open-cut, low-strip ratio, integrated mine refinery concept. When in production, the Broken Hill Cobalt Project will produce a target of 4,000 tonne per annum of cobalt metal, which we intend to market as either a high-value intermediate, such as a mixed hydroxide, or a battery-ready cobalt sulphate product. Just take a moment to think about that number. 4,000 tonne a year of cobalt metal will be one of the largest sources of cobalt, single mine sources of cobalt ex-Africa in the world. So it's a large project. Couple that with a 20+ year mine life, of which we have almost finished drilling out that longevity. It'll be large and long term. The other aspect of the project that makes it rather unique is it's a primary cobalt project. So 80% of the revenue from the operation will be cobalt, and the other 20 will be the only other payable byproduct, which is sulphur, so elemental sulphur. So 80% of the revenue of the project is cobalt, which means that coming into development, we won't be swung in and out based on what typically is a co-product nickel or a co-product copper price. And importantly, and I'll touch on economics shortly, we won't be swung in and out of production based on those co-products as we're seeing currently in the global cobalt market. It's a unique proposition. As a company, we listed in 2017. We delivered a scoping study in middle of 2017. That's the period that we identified an opportunity to use a rather unique processing technology to liberate cobalt from the pyrite. And then last year, middle of 2018, we delivered a pre-feas study. That's all out there in the market. As part of the PFS, as you'd be aware, we delivered an ore reserve and associated economics. That's all out in the marketplace. And looking forward, we're on our way to a feasibility study. A little bit about the logistics. We're located next to Broken Hill. I don't need to tell you that Broken Hill is an established mining town, and all of the C1 cost advantages that come being located next to a major regional centres are available to us. So the access to people, the town itself has some 18,000 population, but the social infrastructure is there to house 30 or more thousand people. So none of those burdens with setting up a new mining operation are upon us. We're effectively leveraging on existing infrastructure, social infrastructure. We have access to mains wholesale power, which is through the NEM. There's a small gold rectangle there in the northeast of the chart. That's 220 kV Australian NEM power at a wholesale rate. We also have access to raw water. In fact, we've been allocated raw water for the project already. And again, there's a small blue rectangle up there near Broken Hill that shows the plumbing point. We also have a mains highway which traverses between Broken Hill and Adelaide, just passes through near the top of the tenement, and a rail line which actually passes through the tenement and within 2,000 metres of the deposit. And that both the road helps us in terms of our people and light logistics, the rail with more so on the heavy logistical side. But all of those are the key building blocks one needs to build a low-cost mine of the future. Some other basics about us. We're located in Australia. We're a safe jurisdiction. And importantly, and I don't say this in any glib fashion, we're not a laterite. We're a sulphide mine. So what does that mean? It means from a commercial partner point of view, there's been a number of poor experiences dealing in lateritic ores. And so therefore, when we travel to find commercial partners, the idea of a non-African, non-lateritic source of cobalt is a truly unique proposition. It also means that our capital intensity, so a simple metric of US dollar capex over tonnes of cobalt produced, is a lot lighter than the equivalent nickel laterite style mine. In fact, of the incoming greenfields projects over the next 10 years, we are roughly 1/3 to 1/4 of the capital intensity of a typical nickel laterite mine coming in with cobalt byproducts. A little bit about what we've achieved so far in the PFS. We've delivered just under a $13 US C1 cash cost. Our target for the FS is to bring that down to a $10 cash cost. Now that gives us a number of advantages, but primarily it means that we're economically resilient. The rather crowded chart there on the top right shows the long-dated cobalt price in real terms. US $10 in real terms means we would have operated through even the trough of the cycle and on a real basis for the last 40 years. In other words, we're making a positive cash margin through the cobalt cycle. And again, we're not swung in or out of production based on co-product copper or nickel. And that gives us an economic resilience. And that's one of the attractive features for us for our project to our commercial partners, which I'll touch on shortly. Our strategy is very simple. We don't want to merely mine and do some low value add. We want to capture the maximum cobalt margin through the cycle. That's a little trickier than it sounds. It means we have to value add, but be cognizant that in the cobalt chemical space, it's not as simple as pinning your ears back on one particular project spec. Specs are evolving, and indeed intermediate products such as a mixed hydroxide can often be arbitraged favourably in preference to a cobalt sulphate. So what we want to do is build a metallurgical process that allows us full flexibility to arbitrage the cobalt cycle and again create the maximum cobalt margin per unit for the project across the life of the operation. To date, we've signed two key partners. LG International came on our books last May. We're the only global cobalt project that they've taken an active equity interest in. I think that speaks for itself. And their view on us is to help us come into production, albeit guide us into that with those production targets, to make a product that their sister company, LG Chem, can ultimately utilise. In other words, a security of supply argument. LG has been really strong, a good, strong partner for us and will continue to be so in the future. On the sulphur side, we recently signed a smaller arrangement with Mitsubishi Sulphur. They'll look to market our test work sulphur that we'll be producing over the next year or so, and again feed that into the Australian marketplace. Australia as a country imports 1.2 million tonne of elemental sulphur equivalent, largely to make acid predominantly for fertiliser, but less so for metallurgical uses. And having a local producer of elemental sulphur on a railway line is incredibly useful for marketing. I just want to finish off with the other part of our business. So I've talked about the Broken Hill Cobalt Project, but the other arm of our business is to leverage our intellectual property. As we've discovered since our scoping study, cobalt in pyrite is a predominant mineralisation in the Western New South Wales, South Australia, indeed in the Cloncurry, Mount Isa area as well. There is cobalt in tails sitting there in dams. Why? Because historically there's been no economic means to liberate the cobalt and associated metals in that pyrite. It's a waste product. We've signed test work arrangements now with 4 tenements. By far the biggest agreement we've signed is with Oz Minerals, with their incoming Carapatina project, which is currently going through commissioning. They are mining pyrite as a halo to their chalcopyrite or as an accidental product. They know it contains cobalt and also significant traces of copper and gold, but they've no idea how to liberate that and currently are venting that into a tail stream. So it's our technology that can be used to liberate additional cobalt units in the district. That's pretty much all I had to say today. A little snapshot there on our capital structure. Very simple company, debt-free, and we're downstairs for what it's worth. In the next hour or so, we're downstairs at F3 if anyone wants to come and pay us a visit. So thank you very much for your time.